Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Lynn & Associates with your weekend agriculture update, and this is for Friday, the 24th of March, 2016. Time that I'm doing this about 2:10 in the afternoon, and the markets are just getting ready for the beginning of the vote at this time that's going to impact a lot of markets. And I'm talking about the Affordable Care Act vote that's scheduled for about 20 minutes from now. Don't know which way it'll go, so I'm doing this well before that, and we'll see what happens. But as you can see, you're getting a certain amount of selling pressure into the corn, the meal, the soybeans. Soybeans especially. You know, the one area that's been the bright spot for farmers coming up has been the soybean market, and why they don't lock in prices 10, 10 and a quarter when it was up there, that's up to them. What can I tell you? I can tell you that there's talk of a shift of as much as 5 million acres from corn to soybeans. I can tell you the crops in South America have been getting bigger, not smaller. I can tell you that their crops there, because of currency differentiations, also get sold easier on the market. So those are the problems we have. The positives to American grain are, number one, every year we go in, we get what's called a spring low. Why? The market breaks down, everybody's planting, they're going to plant too much. The weather then problem starts, the summer weather, so you get your bounce in the markets back and forth. Don't know where it's going to come from, but it's a seasonal, and those are the things that I watch. Now, when we take a look at the soybean market, we've had this triangle pattern on the chart, and it broke out finally this week. So until the market gets back over these numbers back here, and that's on a monthly basis, let's call it, I don't know, 1075, something like that, the marketplace is what? It's committed now to the bearish area. When we go to an area chart of closes only on a weekly chart, you've been in a downtrend. You've had a pattern of lower highs, lower lows continually. You can see that pattern shape up. When I just go to a weekly chart, and I'm measuring now from just the high to the low, you've had a heck of a break. Now you're about $1.08 or so that the market's had on this decline. When I look at the swing line, I now, with today's action, have confirmed for the week lower highs, lower lows, outside week down. So until 1008 3/4, and that's from where we're at right now, is, what is that, about 35 cents roughly, 33 cents is taken out. The market has new vigor to the downside. Take that out, and I would call that then a bear trap, and the market might get a bounce. What about potential support and resistance? Well, we're under the 18-week moving average of closes. That's bearish. We're above the 100-week, which means it's a support number. So 970, 969 3/4, that is your support number, about 6 cents away, and it's tying right in with the lower Bollinger Band at 970.5. So this is the zone that the market has been working back towards. It's taken a long time to get there. If you think about it, this is a weekly chart. So we're 1, 2, 3, 4, 5, 6, 7, 8, 9, 2.5 months from the high to the low now. Interesting to see what's going on. When I look at momentum on a weekly chart, I don't use it the same way that I do on a daily. It's just driving down. So price is being pulled by what? Momentum. Price momentum's leading the market, still doing it. In oversold area, but still doing it. In the meal market, lower highs, lower lows, that's bearish. Under the 18-week moving average of closes, that's bearish. First support, 317.90, which is the 100-week average, which was hit today. Well, let's not use today, this week. And the market's finding its support. It was hit today also, by the way. And if that gives ground, 301.40, the lower Bollinger Band, the next number. Interestingly, it's got momentum pointing down, and it is not in oversold territory, so there's nothing friendly there. We had a nice bounce in soybean oil, but it was a bounce. If you look at the bigger chart, lower highs, lower lows, you're still in a well-defined downtrend with momentum embedded and still pushing lower. I will be surprised if we don't hit the 31.91 100-week average, and if that gives ground, the 31.28. You'd have to go back over 34.30 in order to negate the bear trend right now. In the corn market, this could be the setup for a break early on in the week. Why? You've now got this is the higher high, and you had a lower and low, but that can all change by just taking out this week's low of 355.25. Then you have lower highs, lower and low, take out 353, and you might be able to target the 340 area as a chartist. There's nothing on this chart that can turn bullish. In the wheat market's got the swing line with lower highs. It's got lower and low, then it comes up and made the higher high. That's what I was trying to get my grammar to say. This last high was 441 3/4. You got to 442 3/4. Take out 412, and this market reinstates its momentum to the downside. The swing line is not trending on a weekly basis. In the cocoa market, all you've done is you have corrected a market that bottomed out, looking back at it, right in the 1920 area, right about there, has come back up, hit the 18-week moving average of closes and run into a brick wall against it at 21.38. But with the swing line up and prices there, you can say that the market's hit what? That line in the sand, and this is where the market's going to decide what the next trend is. Sugar market. All that the sugar market did is get up high enough at the end of the week to close within the lower Bollinger Bands. It has not changed trend in any manner on the weekly chart. It still has lower highs, lower lows. Big problems. We're looking at the Brazilians. They are looking at a big-time reduction, and that's what supported the market to a degree today, but there's no demand for their products, even with the reduction. Until India lifts the imports, the biggest buyer that they sell to has said, no, we're okay right now. Any sugar is too much sugar, and that becomes the problem in Brazil. On the coffee chart, you had your rally back to what? That line in the sand, as I teach you here. The 18-week moving average is the neutral point on the chart. It is the point from which much is decided. Markets often whip around it as they're looking for trend. If the market continues down, what it could do is get back to the combination of the 100-week moving average and the lower Bollinger Band. In order for this market to be any good, if you can take out this week's high of 144.45, because it's an outside week down, I'd call it a bear trap and shift my thinking to bullish. Hasn't done it, I'm still in the bear camp. In the cotton market, you've got embedded readings. You've got a pattern of a lower low and a higher high, which makes the swing line not trending. The bias remains up because you're over the 18-week average, but why buy into an upper Bollinger Band? I mean, you might want to. I don't teach that because the odds of it staying there are not that great. Doesn't mean the general trend can't shift up, but the odds of buying into that and catching something, not the best. The weekly live cattle. Again, a market that is fighting at the 18-week moving average. If it's got upside momentum, the next resistance is 126.47.5 to the Bollinger of 124.70. So let's call this market very interesting in that whole general area, and we have to see what it's capable of doing. But the thrust has been up, and momentum, well, it's certainly not pointing down any longer. In the coffee, it is the 100-week moving average that's proving to be the magnet. The market got over it early on, but you'll hear me say often on the daily charts, and it applies to the weekly, that when you do that, it's not uncommon to fight a battle and then fall back to that 18-week average to figure out what to do next. While that's occurring, if you're going to get bullish, you look for the 18-week to cross the 100. Haven't done that at all. So the setup here, at best, I would call it bullish on the chart action, negative on the momentum action, And that's where I'd have to leave it. The two are fighting each other. I want to remind you about consensus and what it is. A lot of you like newsletters, and you want to see what other firms write. And they're hard to get. Let's face it, there aren't as many commodity firms as there were 10 years ago. There aren't as many sources to go to. With the internet and all, what do you get? You get what you pay for. And often, most of you don't want to pay for newsletters. But these letters, and they are from the big firms and so on, and brokers had them, all go into one funnel called Consensus, and they publish it right on their website. You need a user ID to get in. They make a 4-week trial available through us for that. And then on Tuesdays, they take all the letters and they're looking for their bullish, bearish consensus. And they can do it by, say, the gold market, the silver market. They take the letters. They say, how many bullish, how many bearish, where are they? And you can break this down further and further, and that's the beauty of it. So for many of you that like to read letters, get ideas, this is a must. How do you get it? It's simple. You're just going to call us, 866-973-2077. You can go to our website, www.iraepstein.com. You'll see a carousel of free offers. This will be one. You can click right up here over the weekend, and when you see that if you see it, it means that you're on a YouTube video that I put out. And tell your friends about this, by the way. It's great. But you click that, the form will come out, away you go. And under us, on some websites, they'll take our video, post them, and they'll put a click here so that people can get those forms done. Well, just click it, and the form will be there. I'm Ira Epstein. Have a great weekend. I'm going to go watch the voting take place right now. And on my newsletter over the weekend, I'm sure I'll have a lot to say about it. Have a good day.